I'm delighted to be speaking today to Majid Hussain, who's a partner from Evelyn Partners in London, here in Dubai. Welcome, Majid.
Hi, David. Pleasure to be here.
So looking forward to our dinner event tomorrow night. Be great to have you along there. For PCD members who haven't met you before or know about your practice, it'd be great to hear a little bit more about you and also the new Evelyn Partners brand.
Absolutely. David, for those who don't know me, Majid Hussain, I'm a partner in the private client tax team at Evelyn Partners. My particular focus is private client individuals, high net worth individuals, and my practice covers a series of focuses and specialities. International families being a key part of what I do, international clients, res non-dom, non-res non-dom. I do a lot also in the private equity space, so dealing with PE execs who happen to be non-dom in a lot of cases as well. And one of the bigger things that we're kind of seeing is a lot in the cryptocurrency space, which is interesting because here in Dubai, crypto is a very big thing at the moment.
Great. So we'll unpack a number of those trends, but this is the first stop for you on a trip across the GCC. It'd be interesting to hear where else you're going on this trip.
Well, David, you'll be pleased to know PCD is my first stop. So I'm going to be here for a few days. Then I'm stopping over at Abu Dhabi. Thereafter, I'm seeing some clients in Muscat, Oman. And then my final stopover will be in Riyadh, Saudi Arabia.
Fantastic. And one of the key areas that you help clients with in this region is around UK real estate. I imagine it throws up tax challenges and issues. So perhaps you could explain a little bit about how you work with clients here on UK real estate matters.
No, absolutely. Well, look, one thing about the Middle East, David, is that Middle Eastern clients love UK real estate. It's secure, the jurisdiction is secure, and even UK individuals love UK real estate. So it's something that's generally quite attractive. We have a lot of Middle Eastern clients who invest in UK real estate, whether that's a property for the family that they live in or just for investment purposes. But whichever way they kind of invest, the situation, and especially over the recent few years, UK real estate has changed in terms of taxation significantly. So a lot more tax points for non-resident individuals, especially those in the Middle East. So a number of things to think about when investing in UK real estate. Or there used to be a time that actually it could be quite tax-free. You had no capital gains tax, no inheritance tax. That's all changed now. I mean, we've had a whole host of changes that have come through.
Inheritance tax is one of the most pressing issues, isn't it? Because it's on 40% of the asset value. So, I mean, perhaps you could explain how you might discuss succession plans in the context of UK inheritance tax with the family here.
No, absolutely. I mean, there's a couple of things to think about. First and foremost, I mean, one of the things that I note with clients in the Middle East and actually other international clients is not all of them have actually appreciated how huge the changes in the UK have been when it comes to UK real estate. There was a time that you could invest in UK real estate and be outside the scope of UK inheritance tax, especially if you were a non-dom and you were investing via a non-UK company, etc., which wasn't uncommon. However, that all changed from 2017, particularly for residential property, and whichever structure you invest via, there's always going to be some form of a IHT exposure. Now, that doesn't mean actually that, that's it. Is that a big 40% charge for clients? No, not necessarily. I mean, there's a number of things clients can do, and especially for Middle Eastern clients, and especially for those families that have got a very large house, say in London, which actually is expected to be owned not just for the immediate family, but for subsequent generations. It's kind of the token house. It's where everyone summers when they're in the UK, etc. So for those individuals, actually, it's a inheritance or it's an asset that, on the death of the matriarch or the patriarch, they're not looking to sell that to fund the tax. So it generally brings about an actual cash flow issue. So in those scenarios, I mean, there's a number of things that we've seen families do. We've seen them kind of change ownership over a number of family members. So not just one individual owning the property, they start gifting it down to the next generation. We've got situations where clients who had pre-existing structures, such as companies trust, have perhaps got rid of the company, but kept the non-UK trust, excluded the set law, but so it kind of goes from a 40% charge to effectively what could be a 6% charge every 10 years. But look, David, these things are, I know it's a classic tax advisor comment to make, but every situation is somewhat bespoke.
I mean, low-cost debt was often part of the solution in terms of inheritance tax planning on acquisition to help mitigate the IHT liability. But obviously, with interest rates rising, that picture might be changing. Do you think that clients should really be looking carefully at what they have in place, and if the rates on interest rates are going up, cost of debt might be increasing, and they might need to look again at the structuring that they're putting in place?
Absolutely. I mean, there's a few things that come out of that point, David, and I think the first thing that comes out is that legislation is always changing. So it's always good to review your affairs. And I think sometimes with clients, and like I was saying earlier, it's sometimes a surprise that they've put some structuring in, say, 10, 15 years ago, and they think that's it, that's them done, and they don't revisit that structuring. And then since then, there's been a whole swathe of changes. The same is the case for kind of economics. I mean, you're right. Clients have been using debt. It was relatively cheap. Debt's a deductible expense for inheritance tax purposes, especially if it was used to fund the real estate. Now, again, there's an arbitrage. I mean, I think clients have to think about actually with interest rates going up, how much is the saving and the cost benefit analysis. And I think any sensible, advisor would generally review their clients' affairs at least on a kind of annual or every couple of years on that basis to see actually does something else work. Is insurance more appropriate now? And or sometimes it's a combination of all, a bit of debt, a bit of insurance, and perhaps some other tools as well.
And what kind of activity do you see outside of London? I mean, I was recently in Manchester, and a lot of the advisors there are dealing with inbound investment, some from Asia, but plenty actually from the Gulf, linked to the businesses that are there in sports and media and real estate. Do you see activity outside of London as well?
I do. I mean, interestingly, London is what everyone generally refers to. And yes, absolutely, London's hugely attractive for overseas investors. But equally, overseas investors are shrewd. They want better return for their money, and they're looking beyond London as well. I mean, you mentioned some of those towns, Manchester. I recently had a client looking at Slough, which for those of you who are not familiar with the UK, might be wondering where Slough is. I think its claim to fame is, The Office comedy series was based there, in fact, actually, David. But again, the point is actually clients are looking beyond just London. I mean, and also they're looking beyond just residential property. Clients are looking to commercial real estate, especially with all the tax changes. Sometimes, from one perspective, commercial real estate is actually a bit more tax friendly than residential real estate. So all of these things factor into clients. I mean, and ultimately, clients, tax is a part of the discussion, it is not the sole driving force.
Is student accommodation as popular as it once was? That was often the asset class or international investors looking for a real estate play, but with perhaps a bit more efficiency.
No, absolutely. And partly because student accommodation gave an exemption still possibly for inheritance tax as well. So there was a nice kind of tax play there. And again, that continues to be the case. I think the fundamental point, and I was speaking to a client not too long ago who was who had an international portfolio, not so much in the UK, was looking to invest in the UK. And yes, they were going from a situation where they had no UK tax exposure, and by exposing to some UK real estate, they were going to have UK tax exposure. But for them, that was still the right answer from a commercial perspective. And I think ultimately, for any client, it's actually what is the commercial drivers, and then we can kind of think about the tax as part of that discussion.
And you mentioned at the top crypto and digital assets. Now, there's a lot of professionals I've been speaking to mention about crypto firms coming here, the innovation. Is that something that you're seeing when you're interacting with clients here on the ground?
Yeah, no, I mean, crypto is one of these really, really interesting things because it's new, so everyone's learning. We're all in the same boat. The UK's been slightly, especially HMRC, have been slightly further ahead of the curve in terms of establishing their guidance, how they believe crypto should be taxed. But it's bringing out all these great ideas. I mean, I had one recently who was who's doing something in the metaverse, and as part of the whole kind of metaverse project, they were actually thinking about how do they utilize advertising space, and in fact they were talking about tokenizing the Burj Khalifa, so that in the metaverse someone can buy the advertising space in the Burj Khalifa. I mean, it's just incredible the type of ideas and the innovation it's driving.
So London has a great ecosystem for fintech investment. Do you see families here in the region interested in investing in UK companies in a sector that they're very fond of?
Yes, absolutely. I mean, we talk of Middle East and we talk about real estate. I mean, you're absolutely right. It goes beyond real estate. I mean, the UK is a hub for fintech. Evelyn Partners does a lot in the fintech space as well, actually. However, we've seen the UK fintech space be really attractive for a whole host of international investors. In fact, actually, with the number of occurrences that have happened in the UK, take Brexit, for example, COVID affected the globe, and now even the current economic crisis that we're in. I mean, all of these situations have actually meant that really sound UK businesses have been actually relatively cheap. And we are seeing international investors, both apart from this region and actually from the US, pick up businesses, invest in fintech businesses and get a really good return.
Interesting. And do you see then residency moves? So if people look at investing in companies, they own property in London, they might actually decide to become resident in the UK to spend more time commercially to develop an enterprise. Do you see that kind of interest and mobility into the UK?
Yeah, I mean, I almost kind of split it in two parts. There's those clients that are actually thinking the UK is a great place to do business. It still has a relatively attractive regime for non-doms or people that are kind of based overseas and coming into the UK to set up businesses. I mean, I do a lot in the space with kind of tech and non-dom entrepreneurs, and they find the UK a very great place to do business. And we're seeing more of that. And actually, you're absolutely right, even with international families, I mean, they're the kind of second cohort. They're generally international and they might be coming to the UK to start an enterprise, they might be coming just to be closer to children, to a university here. So we're seeing a lot more on the residency place, and it changes. I mean, there's residency, which is kind of long term, so clients that are looking to be in the UK for longer, and some that are just there for a relatively short period. But it's a huge part of what Middle Eastern individuals are doing, actually.
And why is getting the pre-arrival planning so critical for these clients where they have wealth before they move to the UK?
I think in anything that a client does, it's always worth getting some sort of advice before the event. It's those situations we always have is when the client comes to see you after the event, and we can generally help, but it's always easier to help clients before something occurs. And of all the things that clients can do, which is obviously, I'm not saying get tax advice when you're getting married, albeit I wouldn't discourage it. But most events, when you're buying, selling assets, it's always recommended to get tax advice beforehand. And residency is a huge part of that. I mean, residency is what determines taxation. So if you're looking to change your residential jurisdiction, it makes complete sense to take advice. And there is a number of steps that clients can do, in terms of, as you kind of alluded to, David, pre-arrival planning for clients that ordinarily were non-resident, non-dom. There's a significant amount that they can do in getting their affairs ready, both the assets and the affairs outside of the UK, and equally what they're going to be setting up in the UK to make sure it's going to be efficient going forward.
Because people often stay longer than they plan, don't they? They think, oh, we'll go to London 2 years, 3 years, and 10 years later they're still there, isn't it? So, and the longer they're there, the more issues they may have with accessing the wealth that they have accrued.
Yes.
That's why this pre-arrival planning is crucial, because you just don't know how long you might reside.
Absolutely. I think that's the key. I mean, the clients can plan, and you can be the best of planners, but ultimately circumstances change. You come to the UK, you realise that you love it, or your kids might love it here, and you realise actually what was going to be a 5-year play turns out to be 10, 15 years, or in some cases indefinite.
And for those who do end up staying longer, I mean, what kind of planning do you do on the longer end of the curve for non-doms?
That's a really good question, David. I think there's kind of two aspects. I mean, my general view with clients is actually to get a feel from them. How long are they planning to come to the UK? And then actually, it goes back to what we were speaking about before. It's making sure that we're having those conversations with clients on an ongoing basis, because actually there's planning you can do before you come to the UK, and then there's what I would say kind of hallmarks or kind of key periods when you're in the UK, i.e. when you're coming up to 7 years of residency. There's something that you should be thinking about then, because the taxation system or charges generally change for non-doms. And again, there's the 15-year rule. And again, that's going to be another key time to think about, actually, is there something clients should be doing? But at each of these points, there is always kind of effective advice and effective planning that clients can undertake to, again, just to make sure they're optimizing their tax position.
And for those investing in businesses as well, non-doms have access to the ability to some reliefs, don't they, to bring money onshore. Do you see those relief? Perhaps you could explain the relief, and do you see it being taken up by entrepreneurs who are non-doms to try and unlock some of this capital that's offshore?
Yeah, so I mean, this is really interesting. We had effectively, it was business investment relief where non-doms were being encouraged by the UK tax system to take their non-UK income and gains and invest in certain UK businesses which met certain criteria and conditions, and that wouldn't trigger a remittance. Now, when the relief was initially introduced, it was, as with all these things, greatly touted and said it was going to be a game changer. I mean, from our understanding and the stats we got from HMRC, it wasn't actually as effective as initially thought, partly because it had so many rules and regulations that, you know, when clients start thinking and going into the detail, they think it just isn't worth it. Now, in fairness to HMRC, they have changed the rules. They've relaxed some of the conditions, and we are seeing a bigger uptick. And it's always there. Again, it's kind of what I always say when it comes to UK tax advice. There's no one kind of tool. It's another tool in the arsenal of all the different things a client should be thinking about when they're thinking about their affairs.
One of the big trends of recent years is clients investing in private markets. Is this something that you're seeing with high net worth clients investing more in private equity, private companies, looking at alternative investments?
Yes, absolutely. I mean, it kind of goes back to the point, one of the other points you mentioned, David, which is clients are looking for a good return. Real estate is one of the asset classes they're looking to invest in. And private equity actually is becoming more and more popular. We're seeing more clients, more families and family offices investing in private equity. We're seeing families coming together and clubbing together and setting up their own quasi funds, you know, mini private equity funds. And those funds might be investing in certain spaces and certain spheres, like the tech sector, like the crypto sector. So yes, it's a trend we're seeing increasingly more.
Why might they use a fund over just a regular company? I mean, what's the advantage of going for a fund structure as a pooling vehicle for investment?
I think generally, firstly, it's actually sometimes with clients, it's what they know. So if it's something that they've invested in before, familiarity is something that clients are generally always more comfortable with. But actually, the ability of a fund structure is that it allows other investors to come in. So actually, it kind of de-risks the client somewhat. They're not the sole investor, and they can bring in other families, and they can actually bring in other investors at a later point in the life of the fund.
So it helps them formalise early investments, but then ultimately also they're building out a track record and can raise capital
Indeed.
down the line. No, that's very interesting. And are there particular locations you see being used as sort of fund centres of excellence for clients in this region?
I mean, it varies massively, actually. I mean, depending on the size of the client, the size of the investment, I think sometimes certain jurisdictions can be a bit more expensive than others. I mean, the crown dependencies tend to be quite popular. People generally, use places like Jersey. I mean, Luxembourg again is an area that's quite comfortable, and as well as actually, the regions here in the Middle East, the free zones are really pushing that space as well. Actually, really trying to encourage local families and investors based in the Middle East to actually use the free zones when they're creating these funds.
Because there's been great innovation here in Dubai, hasn't there, on foundation law, new laws coming out. How are you seeing that factoring through into practice in your interaction with clients looking at the UK or broader succession planning piece?
Again, I think, David, it depends on the family, it depends on the client, and it depends on what they know. So from a kind of, a foundation and trust are both vehicles that help with succession and both help with asset protection. However, actually, some clients might like the feel of a foundation a bit more. Others actually might like the feel of a trust a bit more. I mean, trusts are tried and established, so that generally gives clients a bit more of a comfort. However, foundations are becoming increasingly popular here in the Middle East. I mean, the DIFC, we're here in Dubai, they do a big piece on foundations. I'm going to be going to Abu Dhabi and ADGM Free Zone. They're doing a big play on foundations, and actually Saudi Arabia are doing a big piece on their free zone. So I think it's something that's beginning to increase, and I think we'll see more of it.
And you're off to travel now to some other countries after you've been in the UAE. I mean, what do you observe of trends in Saudi and Oman and elsewhere that you go? Are clients facing similar challenges? What do you observe of some of the opportunities in those countries?
No, absolutely. I mean, look, we've been speaking a lot about clients kind of coming from this region and looking to the UK. I mean, equally, there's a number of clients that I deal with that are UK based and looking to come to the Middle East because they see innovation and huge opportunities here in the UK. So there's a lot of clients that I deal with in terms of breaking UK tax residency and adopting residency in the various Middle Eastern jurisdictions. I mean, but going back to your particular point, I mean, I'm going to be traveling to Oman and I'm going to be traveling to Riyadh. And again, I think generally on a global sense, most clients have the same concerns. Asset protection and succession actually is something that all clients think about. You know, they've accrued wealth, they've accumulated wealth. They want to make sure they can pass that on to the next generation in a tax efficient way, but also in a way that they feel that the next gen aren't going to squander the wealth. But equally, they want them to have enough access to the wealth so they can do the great things that they want to do. You know, set up businesses, innovation, maybe do something in the charity sector. So those challenges are actually global. So whichever jurisdiction you go to, you'll actually find when it comes to clients, the core values and concerns they have are generally pretty universal.
Fantastic to speak to you today, Majid, and look forward to sharing this interview.
David, it's been a pleasure. Thank you very much.
The latest technical content delivered through global conversations with professionals for professionals.